Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Good evening, good evening, good evening, everybody. Hey, how you doing? Got to turn my fan on. Turn my fan on back here. Good evening, man. How everybody doing? I dropped the link to the Zoom chat. The Zoom call, it's in the pin to the top of the chat. If you'd like to hop on the Zoom and unmute and ask a question, share a comment, or just, hey, watch it without a 4-second delay. Let me see how many seconds it is. 1, 2, 3, like a 3-second delay. If you want to watch it without a 3-second delay, hey, click in. Let's get to it, man. What are the purple things and what does the number represent? That's what I was talking. Remember when I was talking the other day, I was like, they finally put the crowns on my channel. It's something new that YouTube do with like live streams, I guess, where the more you interact, and it shows like the top 3 people, I guess. Like the more you interact, the more it's at the top. It says top fans, right? It's got something to say top fans. And if I click top fans right now, I can see that Here to Learn and Share got 75 XP. Kim got 25 XP, and Run the Green got 25 XP. Those are the top fans right now. And the more you interact with the chat, then you get XP points, I guess. I don't know how it worked. I saw it on Tremaine's live stream one day. I was like, hey, what's the crowns for? I want crowns on my live stream. And then I think Monday, I looked up and I saw the crown. I was like, oh, they finally put the crowns on my channel. Right.
Tim, what's XP?
I don't know. I don't know. I literally just said I don't know how it works. But it's that's what they put, that's what they name it as, XP. I guess, I don't know. Let's see what it means. Let's see what it means. Let's see what it means. What does XP mean on YouTube top fans? On YouTube, XP is the context of top fans on live streams refer to experience points. It stands for experience points, which are earned by viewers through engaging with the stream. These points are accumulated through actions like sending chat messages, super chats, super stickers, or gifts. The more XP a viewer has, the higher they rank on the engagement leaderboard. The top 3 viewers with the most XP are awarded special badges that appear next to their name. And then they got some more breakdowns right there. There it is right there. Now we know what the XP stands for, experience points. Let me make sure I'm in focus here. I see a little, there you go. To make sure I'm in focus, I looked up and the box wasn't green on me. It was gray. It was a little out of whack. Now that we figured out what XP mean, right? Let me go back and say, if this first time tuning in to Tim's Tidbits, please make sure my mic turned up. My mic is turned up. Yes, it is. Do I sound good, y'all? Test, test, test. 1, 2, 3. Do the mic sound straight? It looked like it's turned up. Thank y'all for the feedback. Badges, run me some money, YouTube. Good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbit. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you know hablo Espanol. And as you saw in the trailer beforehand, you're in tune to the intraday price action recap. And this episode is being brought to you by the Smart Money Manuscript. Y'all check out the Smart Money Manuscript. The Smart Money Manuscript coming together. I'm really proud of it. I'm really proud of the Smart Money Manuscript, how it's coming together. It's taking shape. It's taking shape, baby. This ain't my first time putting together some educational material, but it's my first time doing it in the format of a course. It's coming together. I'm proud of myself. Now, I already told y'all about the link pinned to the top of the chat. If you want to pull up on the Zoom, click on that right there. Now, did Price do anything today that caught anybody off guard? If Price did something that caught you off guard, feel free to click on the Zoom link up there that's pinned to the top of the chat and pull up and say, hey, Tim, got a question, right? Why did Price not go up today? I was expecting it to blast off to the moon after we swept that low down there by the new week opening gap this morning, and I was expecting it to run to that weekly high again. Why didn't it do it, Tim? Or say, Tim, why did it just chop around and take my money? Why did it do it, Tim? Or say, Tim, say anything besides Tim. Do you know what it's going to do next? So pull up. Holla at your boy. Let's see here. Share the screen. Let me give me a sip of this high quality H2O, and then we're going to get into it. Y'all like my lamp over there? Y'all like my lamp? That lamp there. Do y'all like that lamp? Right over there. That's a real lamp. Now, that lamp there, that lamp right there, that's a fake lamp.
The fake lamp look realer than the real lamp. The real lamp definitely look warped and fake.
That's a fake lamp. That's why I said that. That's a real lamp right there. I could pick this up. This is a real lamp. It's plugged into a wall. I can turn it on and off, right? This is a real lamp. You know what I'm saying? But this thing over here, I can't see. This is a fake lamp. There's nothing even though. And it's crazy because this lamp, like if I point like this right here, it looked like I'm pointing to a lamp
behind me, right? It looks like I'm pointing to a lamp behind me, but I'm actually pointing directly to my right side over here. I'm pointing toward the door. You know what I'm saying? I'm not even pointing, like, it looked like I'm pointing back behind. Like, when you see the lamp, it looked like the lamp is back behind me, back here, like this, right? Like back over here somewhere. But when I turn my hand like this right here, I'm actually pointing over there straight to the side. Straight to light skinned Deborah popped up in the house. What's going on, Deborah? Tell my dog sure when I said, what's happening? Or are you working a double shift?
Okay, I tell him.
You working a double shift.
Stop it.
Am I sharing my screen? Yes, I am. Yes, I'm sharing my screen. Let's get to it, man. Let's get to it. Today, Wednesday, July 16th. All right. Price opened up right over here. Right. This is where price opened up. So if we stretch out the chart there, this is today's price action. Make sure I get on there right. Yeah, that green candle belongs. Right. That's today's price action right there. From 6 p.m. There's some more stuff started. So I got to chop this off. There you go. That's today's price action. From 6 p.m. up in 6 p.m. yesterday up until 5 p.m. today. Right. And looking at the intraday price action on this 5-minute chart, right? Looking at this 5-minute chart over here, does it look like we broke outside of that consolidation range where we've been accumulating and we've been engineering liquidity? Right. Do it look like we bust outside of that range? Anybody?
Not really.
That didn't sound too convincing. I see a no in the chat. And I heard a very not convincing, not really. I see another no in the chat. We got a bunch of no's and a not really. Right? Let's squanch up the chart a little bit. This from here that way is today's price action. And when we squanch up the chart, now we can see, no, we definitely did not break outside of that range. We definitely did not break outside of that range, right? This right here is the highest high of that range, right? And then I think the lowest low maybe over here somewhere. You got to go to the daily chart to see that. I ain't gonna hold you. All right. Yeah, so this is the lowest low right here. This is the lowest low once we started to displace, and then we just started engineering liquidity, right? And that right there was the highest high right there, right? And so we've just been, and if we just put a rough little circle around all the bodies, and then we go back down to intraday time frame. All right. So I was correct in pointing out the low down there, right? But this is the bulk of all of the consolidation, right? This is when we took out the liquidity and expanded up, right? Creating the latest portion of the bullish dealing range, right? Right there. And then we start engineering liquidity, expanded the bullish dealing range, engineering more liquidity, expanded the bullish dealing range, and now we're engineering more liquidity. We're still inside the meat and the potatoes of this area of accumulation, right? So what does that mean, Tim? That means relax, don't do it. That means relax. Don't try to force anything on a long-term basis. Don't be right now is not the time to be trying to buy calls. Right now is not the time to be trying to buy puts, right? Can you buy calls or buy puts and make money right now? Yeah, you probably could, right? But if you do, what are you doing? If you was to just go in and say, okay, we're up here in a premium, right? We're consolidating. I'm anticipating this to be the initial consolidation for a market maker sell model to come back down here below this low right here. And I'm going to buy some puts. What would you be doing if you did that? Any take? Man, we got 2 Debras in here. Am I seeing double? Am I seeing double? We got RN Deborah and we got light skinned Deborah in here. We got 2 Debras in here.
I got to switch. My phone is dying.
Okay, then got that Slick Vic echo on there, right? calling the top. I'll work with calling the top, but aside from calling the top, right? You would be doing what? Right?
Gambling.
Gambling. There you go. I was gonna say it starts with a G. You would be gambling, right? Because you're not acting based off of algorithmic signatures, right? You're not acting off of algorithmic signatures on a higher time frame to say, hey, we are engineering liquidity and the algorithm has made a decision, right? Tim, how does the algorithm make a decision? What do we look for, right? And come here, right? You see these little things, right? These little imbalances right here. Those little imbalances right there, right? That shows you that the algorithm is displacing from a range, right? So we came here, we ranged here, and then we displaced away, creating a fair value gap, And once we did this, right, we retraced back and then started to move up, right? True, we retraced back and then we went into another holding pattern, right? But when we retraced back, took out the high, right? Then we retraced back, took out the high. Then we retraced back and swept some sell side liquidity and then pow, took off. Then now we're over here consolidating again, right? So the algorithm is just accumulating right now, accumulating buy stops and sell stops. And it's not given any type of direction on the higher time frame. So since we're in a buy program, right, we just assume that we're still in a buy program until it's invalidated, right? If it doesn't come down and invalidate the buy program, right, we just wait for it to come back to a discount and give us an opportunity to buy. Well, Tim, what time frame do I use? Whatever time frame you want. Whatever time frame you want. And on whatever time frame you use, you look for the discount of the latest expansion of your dealing range, and you look for some type of imbalance or liquidity that needs to be taken, and then you participate. How about that? Right? So right now, we just chill on. We're still inside that range, doing a whole bunch of nothing, talking loud, but ain't saying nothing, right? And if we look at the weekly candles, right? This is the latest expansion of our dealing range here. That's the low that took out liquidity, and that's the highest high that took out liquidity. And a discount of this entire range, right? You can see here we expanded, but we never retraced to any type of discount, right? So we expanded, right? How does price move? Price delivers in two different ways. What are they? What's the first way? Talk to me. What's the first way?
ERD.
And what that stands for?
Consolidate, expansion, retrace, and deliver.
Then what's the second way?
Consolidation, expansion, reverse, retrace, then deliver.
That boy put that emphasis on that reverse.
Yeah, you got to reverse, take out that liquidity on the other side, and then.
All right. So right here, right, we've consolidated, we've expanded, but we never retraced, right? We've consolidated, we've expanded, but we never reversed, right? So we've consolidated and expanded. So it's like watching this dealing range here, right? You say, hey, we're up here engineering liquidity. We've reached up into the buy side, extending the dealing range out, letting us know that, yeah, we do want to go up. But if you're going to go up, are you going to come down and let me participate? Right? And looking at the weekly chart, right? Where's the discount from where price has expanded to thus far? Anything below this red dotted line here, and we're just going to call it 22,400 just for easy math. I don't feel like opening up the field to get the exact number, so we're just going to say 22,400 for easy math, because if I hover right there, it says 22,419 and 3/4. So I'm just saying 22,400 for easy math. All right. So anything below that is a discount of the current expansion leg of this extremely large bullish dealing range right here. Right? Extremely large. And then when we dropped here, boom, reverse there, boom. Right? Guess what we did? Right? We got a balanced price range here. Quick little V. When you got that little V like that right there, this is the trap here. Right? So since that's the trap there, right, we could realistically look at this here as the portion that price can realistically revisit if it wanted to. Right? It can realistically revisit if it wanted to. So if this is the area that price can realistically revisit if it wants to, right? Tim, help me explain what you're talking about, man. That means that if price drops all the way down here like that, that right there is your higher time frame invalidation point right there for the bullish buy program right there. Coming down below there, right? That's your invalidation point for the bullish narrative on the weekly time frame. And then once you identify your invalidation point on your time frame that you're looking at, you want to go up to see if there's a reason on time frames above the time frame you're looking at for price to come down there or up there. And if there is a reason on the higher time frame, like an imbalance, especially an imbalance, like internal buy side or sell side liquidity, then you have to allow for the algorithm to reprice there. If it chooses to do so. But if there's no reason for the higher time frame to come below or above that invalidation point, then it's just that, an invalidation point, and the market has switched its narrative. Let's go to a monthly chart now. All right. So on the monthly chart, as we see, we have a monthly BISI down here. So price can realistically come all the way down and take out that low that we pointed out on the weekly time frame and still not invalidate the higher time frame bullish order flow. Still not invalidated. But Tim, why? That's a huge drop. How can you say that? Because if I go to the lowest low to the highest high of the latest expansion leg on the higher time frame, fair value rests right here. And we'll just call it 19,200 for easy math. Right? Not no 20,000. We'll just call it 20. I said 19,200. That was 19,900. Right? So we'll just call it 20,000 for easy math. 20,000 is fair value. Right there. Whenever we take out a high, if we get a strong retracement, it's totally allowable for price to come back to equilibrium or fair value. So looking at the higher time frame, right? Looking at our higher time frame and understanding where we are on our weekly time frame, we now know that the monthly time frame has a valid reason to come all the way down here. Let's just get us a line, and we're just gonna put it at like roughly 20,000. That's close enough for government work, right? The higher time frame chart has a reason to come all the way down there. All the way down there. Has a realistic reason to be allowed to come all the way down there. Right? Do I think that will happen? No, I don't. Right? No, I don't. I don't think that'll happen. Why? Because when you look at statistics of the market, right? When you have a market that does X amount percentage the first half of the year, right? The second, the market tends to end positive like 70% of the time or something like that, right? So there's a 70% chance that the market is going to close up on the year, right? And if we go to a 12-month chart, right, this is the yearly open right there. That's the yearly open right there. Right. So that's our yearly open right there. Right. Where'd that go? That's our yearly open right there. All right. So now let's think about it.
here, right? This is our yearly open. All right, so over here, we started out somewhere over here. Okay, all right. So throughout the year, right, came up, set relative equal highs, right? Right. So we opened the year, traded up, set relative equal highs, dropped down below the open, right? Came up, got a bullish break in market structure there, retraced down, and we came up, set all-time highs, right? Right. So now this is everything we did throughout the first portion of the year. All right. So we've set all-time highs. We, you know what I'm saying? Did a little consolidation. We did a manipulation. And then now we're back above the open, right? So if price want to come down towards this area that we said is totally allowable for price to come there, right? We're going into August and September, right? We're going to August and September, going from the all-time high, right? If we got a correction, right? If we got a correction, we're going to go, let's just say, this the NASDAQ, so we're just going to say 12%. And we can even say 10%, but I'm going 12% so we can come below this low right here, right? But these internal lows right there, right? Let's just say 10% correction, right? That brings us down and takes out sell side liquidity, right? Takes out sell side liquidity. What else does that do? That puts us back below the yearly open again, right? So what does that do, right? Anybody who didn't get an opportunity to buy below the open during this manipulation phase, right? Down here in the manipulation phase, see how we dropped here? We came back and dropped below the open here, right? Into a discount of this little portion right there, right? Before rallying and making all-time highs, right? Anybody who didn't get an opportunity to get long below the opening price of the year for this expansion up to make all-time highs, right? A retracement back down into that sell side liquidity right there. And then what do we have here? We got that oh so infamous lower quadrant of our current dealing range. Where does that reside? Below the yearly open, right? We got some more sell side liquidity there, right? That 10% will put us below that sell side liquidity, right? And that'll give opportunity to buy below the open, right? When you're bullish, what do you want to buy? In a discount at or below the opening price, right? Looking at a yearly chart, right? Coming below the opening price will put us in a discount at that oh so influential lower quadrant, right? What do we see at that lower quadrant there? If we look over here, if we look to the left, boom, right there, right? What do we have right over here? What's that right there? That's a bullish order block right there. All right, that's a bullish order block right there. Right, right there. Right. We've traded back above that area. So what do we have right there? That's a bullish breaker right there. It's in line with what? That lower quadrant right there. Right. There's a bullish order block right there. Right. All this right here. That's like a nice little confluence if price was to come there. Just thinking out loud right now. But you always want to understand, where can price realistically go? Right?
And since our higher time frame says it's perfectly okay for price to come all the way back to here, right? If we started dying out, right? You say you're going to the gym? You going by yourself? All right. Be safe. All right. If we came all the way down here, there's no need to panic. There's no need because why? It's perfectly okay. Right? Perfectly okay. All right. Now that we've established like where we are in price and what price could realistically do on the higher time frames, right? Let's go back down to the lower time frame and look at today's price action. Right. So open up over here and then right and a big look consolidation range right here. You know, we had a lot going on, but in the grand scheme of the day, right, we had some consolidating going on up to midnight. This is where midnight opened up here, right? So we open here at midnight, right? Once we open at midnight, right here around 1 o'clock, we wick up, take out the buy side liquidity from this consolidation, right? Taking out the Asian high, right? And once we took out the Asian high, we come back down, we break down, taking out the Asian low, and over here during the 250 to 310 macro, right? We trade down into the new week opening gap from this week, right? So once we hit the new week opening gap, we make our way back up to the mid prior day's low, hung out around prior day's low and the midnight, right? Bouncing in between the prior day's low and midnight and the new day opening gap. New day opening gap and midnight is roughly in the same place right there. Really can't see it. It's like a faint little line right there. That's your new day opening gap right there. And then, so we're just bouncing in between this area here, right? So as we came down, right, this drop down, what did that drop down do? That drop down extended the bearish dealing range that we started after making a new all-time high and taking out the prior week's high, right? So we came up, made a new all-time high, taking out the prior week's high, and then we dropped down, right? Getting a bearish break in market structure, right? Took out another low there, and we started consolidating right there at that market structure shift here, right here when we broke out that low, because that low took out some liquidity, right? That low took out some liquidity. So once we trade back below those, we got a bearish break in market structure, right? So at the prior day's low, that's where we was there, hanging out, consolidating, engineering liquidity throughout the Asian, pop up above the buy side, right? When you're bearish, what do you want to see price do first? Take out the buy side, right? So we pop out the buy side after 12 a.m., right? So going into a new day, what do we anticipate going into a new day? Or what do we anticipate going into a new anything?
Manipulation.
Manipulation, right? When Deborah, you sound funny. You all right? You ain't sick, are you, Deborah? Are you trying to whisper? You trying to whisper because you don't want to wake up your grandbaby?
Yep.
Go in the closet like Yolanda do. Yolanda be hiding in the closet.
Right?
So coming into the new day, right? We manipulate out the buy side, also trade up into a SIBI, and then we drop down and we extend the sell program or extend the bearish dealing range. All right. So then after we do that, we sit here consolidating again, and then coming into the New York kill zone, right? roughly. That's close enough for government work. Coming into the New York kill zone, right? We pop up, take out some buy side liquidity, right? Once we take out buy side liquidity, right? This is our pre-market high right there, going into 930, right? So going to 930, we're going into a new what? We're going into a new what at 930? 930 starts a new what?
Session.
A new session, right? So coming into the New York kill zone, we start a new kill zone and we take out buy side, right? And then going into the new session, we take out buy side. And once we take out buy side in the new session, what do? Come down and extend the bearish dealing range, right? Because we're in a sell program, right? On the intraday time frame, on the intraday time frames, we said the other day that we were in a sell program. So whenever you're in a sell program, you look for opportunities to sell until the sale program is invalidated. When you're in a and sell in a premium. When you're in a buy program, you look for opportunities to buy in a discount until the buy program is invalidated, right? So on the intraday time frame, right, we have been since here, right, since we came here, got this break in market structure, the market has been in a sell program, constantly extending. Oh, there. Yeah. Oh, you just now leaving, son? Yeah. Boy, I thought you were gone. I ain't know what. I was about to get the strap. I ain't know who that was. All right, be safe, son. Yeah, that boy made me nervous. That boy came here about 10 minutes ago, said he was going to the gym, and then I heard a whole bunch of noise out there in the hallway. All right. So, yeah. So, Tim, how do we know if we should be trusting the intraday price action when the higher time frame is not giving us any clear direction, right? You either you trust it or you don't. That's the purpose of the stop loss, right? That's the purpose of the stop loss, right? Is if you get stopped out, it doesn't mean that the concepts don't work, right? It don't mean the concepts don't work. It just means that you missed something. You missed a signature that said, hey, price is going to do this before it does that, right? Because if price does this, then it should do that. What signature did you miss to get yourself stopped out, right? That's what you got to learn how to do. When you take a trade and you get stopped out, go back and look at the price, see what did I miss to let me know that I was going to get stopped out, right? Because here we are. We did a session. When did we do that pop-up session? Yesterday? When did we do that pop-up session? Yesterday?
Was it on today?
When we did the pop-up session?
That was yesterday. Yesterday, yeah.
Yesterday?
Yes.
All right, so it was yesterday. Let's see if we can find yesterday's price. Because that's a really good example of what I'm talking about right now. So Tuesday. All right, so okay, so this is all right. Now let me do this right here so I can know where I am in price. 930 to 11. Nope. Yeah, I do that. 930 to 11. That's fine. All right, so 930 till 11. Now let's knock off the rest of this right here. We'll just put it on there to 12. We'll just put it on that to 12. All right. So let's go here. Go to 1 minute charts, right? This is the New York session here. Right. This is the New York session. This is, all right. So looking at this move here, came here, boop, right? Came down there, boop, right? And matter of fact, let me do this right here. All right. So, and this is for everybody who didn't tune into the pop-up. This for everybody who didn't go watch the replay, because I shared the pop-up on YouTube on the public channel, right? A lot of times people be missing gems because I don't be naming stuff like the number one way to trade ICT concept. I don't be doing the real clickbait stuff. My videos be real simple. It be something real plain, like it'll say price action pop-up session 7/15/25 right there. Price action, only 64 views, right? Only 64 views. Now, everybody that was on that pop-up and everybody that looked at the replay, right? Matter of fact, I ain't gonna say nothing. If you was on the pop-up or if you was on the replay, right? Unmute or drop something in the chat and let the people know what you thought about this session right here. Was it good? Was it bad? Was it great? Was it, as they say, gems? You know what I'm saying? Was it informative? Let people know what you thought about this session right here.
Hey, Tim, there was definitely gems in there.
Somebody said, my God, awesome. That's what somebody put in the chat on the Zoom. Seawalk said it was definitely gems in there, right? The YouTube, yes, really good, gems, right? I heard some new stuff. Somebody said I heard some new stuff, all right? But if you look, it only been looked at 64 times. And I'm pretty sure the people that was there, those 60 few views come from the same people looking at it over and over. All right. But people be missing out on the gems because I ain't got the clickbait titles. I ain't got the, you know what I'm saying, how to trade, how to make a $10,000, how to turn 100 into, how to ICT. I ain't riding on Michael name in my channel name. I ain't riding on his name in my descriptions of my videos. I mean the titles of my videos. So people missing the good stuff, man. Right? They're missing the good stuff. But looking at price here, okay, we've come. Get out the way, Zoom. Right. Looking at price here, this is our 9:30 open. Okay. Price. Let me put on. I'm gonna put on the pre-market too. Let's make a thing for pre-market. Right. Man, that's huge. Okay. So it's pre-market. Right. This is pre-market here. And this is once the New York session open here, the green. Right. So the red is pre-market. and the green is once the session open up until 12, right? Up to 10 right now, up until 10. Because I forgot I chopped off some stuff. So looking at what price did here, right? We went up, took out a high, then we dropped down, took out a low, right? Retraced back up, right? Then took out the low again, right? And we're right here at the prior week's high, right? So looking over here, we've taken out sell side there, right? We're right there at the prior week's high. Now, based off of what we're looking at here, just looking at price there, right? Right. On the overall time frame, what is going on with price on the overall time frame? Right? What's going on? When a buy
It's in the
program,
buy program.
when a buy program, very good. Right? Bullish, when a buy program, right? On the intraday lower time frame, right? What's going on? I'm zooming out a little bit so you can see. Right. So coming into pre-market and into the open, right? What are we are? Right? What's going on with price?
In the sale program.
Win a sale program. Very good. Right? Win a sale program right there. All right. So coming into pre-market, right? We go in, we come up, we take out buy side, right? And we drop down, take out sell side, right? We come back up, we take out buy side, right? And then going into the 9:30 open, we take out buy side and we come down and take out sell side, trade back up, take out sell side, right? So like we said, we're in a sell program right now. Okay. Pre-market high was here, right? That's pre-market high. Buy side, right? It's right here. Pre-market low. Sell side. Okay. Now we know when you're going into something, you let price establish the range, right? The range is established when time meets price. We're looking for something to happen. So coming into the new session, right? We got our range established there. And then the algorithm engages the buy side, right? Because at this point right here, right? At this point, let's go here. At this point right here, what's up with the intraday price action? Intraday price action. When a buy program or a sell program?
Buy program.
When a buy program. All right. When a buy program. Okay. Now, if when a buy program, right, and we're looking at the market here, right? Where are we in our dealing range? When a premium or a discount?
Premium.
We're in a premium. Okay. So if we're in a buy program on the higher time frame, we want to buy program on the intraday time frame that we're looking at, but we're in a premium, right? Are we chasing price trying to buy?
No.
Nope. We're not chasing price. We're not chasing price to try to buy. Okay. So now we have come into a weekly high, right? Let me get my what was the 15th? Yeah. All right. So this is we're here on the day. This is where the day started, right? So the day started here. We've come into a weekly high, right? We've come into a weekly high. And now that we've reached this weekly high is a what? Hmm?
Anticipatory reactionary point.
There you go. I like the way you struggled through that. I would have just took the ARP, but we are at, and wait a minute now, you got to say it right. Since you're gonna struggle through it, say it right. How you supposed to say it?
Anticipatory reactionary point. Again.
say it for who go Deborah K said. Deborah K said because she gonna wake her grandson up. Marco, say it for her. How you supposed to say it?
ARP.
Man, come on. Stop playing with me.
I get
Yolanda,
tongue twisted.
how you supposed to say it?
Anticipatory reactionary.
Got to get it to me though. Get it to me.
Yeah, I gotta say it slow motion.
Get it to me, Yolanda. What you got?
Anticipatory reaction point.
Nah, man, y'all ain't giving it to me. Lump, where you at?
ARP.
Oh my God. I need somebody to say it like little Tim.
Okay. Say that's the action, and then
No,
that's the
mute yourself. Mute yourself. Mute yourself.
He
Somebody
just
got
wants us to say it with our chest.
say it with your chest. How would little Timmy Rogers say it? He'll learn to share talk. Somebody said it for you. We couldn't hear you. We couldn't hear you. Okay, since everybody's scared to say it, right? This weekly high, that is an anticipatory
reactionary point.
And you got to do your hand like that when you say it. You got to say anticipatory reactionary point. Okay, now that we got that out of the way, right? So during this day so far, we have come up into an anticipatory reactionary point, right? Retraced back down into a discount, came back up, right? Set relative equal highs, right? Then we came over here and slowly extending up, right? This bullish dealing range, okay? So now, throughout the day, we've come to an anticipatory reactionary point. So now, when you get to the anticipatory reactionary point, we're waiting to see if price wants to continue or if price wants to retrace into the range, right? So coming into pre-market, right? Coming into pre-market, we extend the range, right? We come up, take out buy side, right? Drop down, take out sell side, then come back up, take out buy side. So we're extending the overall range. Pull back to a discount, right? Take out buy side, right? So now we got our opening range. Our pre-market high, pre-market low, getting ready to go into 930, right? So we're in a buy program, right? And if you're following the rules, right, you're looking for a reason to buy, right? If you want to buy, you want to see price do what first? Take out some form of sell side, right? You want to see price take out some form of sell side.
right? So when we look at, price, right, in the range that we're in, we're getting to what I talked about yesterday, but I can't just show it without walking through everything. Y'all know how I do, right? So this is our current like dealing range, right? Because we expanded the range up, right? When we came here and extended it, we came back to a discount, right? Then when we came here and expanded it up, right? We got buy side, sell side. We left that area, right? So now we see here that we come back to the order block. The algorithm is using this as a balanced price range, right? So it's working inside this. It's working inside of this range here. We came back to a discount at that oh so beautiful lower quadrant, right? And what's resting at that lower quadrant, a bear bullish order block, trade back into that. Then we go up and we extend the dealing range, right? So now this is our range that we're in now, but we see here we've offered a discount to buy, right? And taking out the buy side. We see here we offered a discount to buy and taking out the buy side, right? And so now where does that take us next, right? Because we came back down into a discount and we took the buy side, right? So now we're here, right? This is the portion of the range there. And now where are we here, right? We're in a discount, right? But we haven't taken out the buy side, all right, for the buy program, right? Now, when we go into 9:30, we're just going to put some meat on the bone up into, I think we had let it go up into 10 last time. A little bit more. Yeah, I think that's where we was at right there. Okay. Now, when we expanded up here, came down where that oh so beautiful lower quadrant, what's resting there, a high probability order block, what's resting there, a fair value gap. And then we did what? Took off and took out the buy side. So now we've offered a discount here and taken buy side. We've offered a discount there and went and taken buy side, right? Then we came back here in this little portion, right? And then going into the new session, we immediately took our buy side, right? But we're in a buy program. So if we're in a buy program, right, going into the new session, if you want the buy program to continue, you would want to see it do what? Take out some form of sell side first, right? Because that would be the manipulation, and then go back up and give you a what? A bullish Judas swing. But coming into the new session, what do? We immediately take out the buy side, fulfilling this discount retracement back to the buy side, and then we drop down here and get what? A breaking market structure and a bearish Judas swing. Okay, we got a breaking market structure and a bearish Judas swing. All right, so now since we got a breaking market structure and a bearish Judas swing, we took out the pre-market high. Now that we've taken out the pre-market high and got a bearish Judas swing, what is the reasonable target? Somebody tell me the reasonable target now that we've gotten a bearish Judas swing after taking out the pre-market high. What's a reasonable target?
The low that sent it up there.
Okay, the low that sent it up there, but it's the pre-market high. So what would be that low? Right? Because this right here would be the low that sent it there. Yes, the pre-market low, right? The opposite end of whatever algorithmic dealing range that you just swept
and got your breaking market structure from, right? You sweep. This is our algorithmic dealing range. We swept the buy side and got a break in market structure. So now a reasonable target is the opposite end of that algorithmic dealing range. That's a reasonable target, right? And then you have areas in there that you would be watching. Why? Because price is currently in a buy program. So you're not trying to force that low. That's just the reasonable target. Okay. Now, once price delivers to that reasonable target here, right? We deliver there at 9:30, 9:40. I'm sorry, right? 9:40. We deliver to the reasonable target. All right. Once we deliver to that reasonable target, okay, on the intraday time frame, what have we done?
Switch to a sell program.
Yes, we have switched to a sell program. We've established a bearish dealing range. Tim, how do we switch to a sell program? Because when we wicked up here and came back down, we got a bearish break in market structure right there. And if you look right here, that right there gave us a change in the state of delivery when we trick, because these consecutive up close candles here, these are the highest consecutive up close candles in this rally up. And when we sweep liquidity and trade back through that opening price right there, that's a change in the state of delivery, right? Change the state of delivery because we've came into buy side liquidity, right? Manipulated and then had a change in the state of delivery, right? So we got a change in the state of delivery there. If you look here, we have an inversion fair value gap there, created there, and we got a bullish break in market structure created there, right? So now we've switched to a sell program, all right? Because we're respecting the premium PD arrays and pushing through the discount PD arrays, pushing through lows, pushing through bullish fair value gaps, pushing through lows, pushing through bullish fair value gaps. All of these are in the discount, right? Not just below price discount, but actually in the discount of the move, right? Taking out the sell side. So sell program is intact. We retrace back up here, set relative equal highs, and then we come back down and take out that low, right? What does taking out that low do?
Extend the bearish dealing range.
Exactly. Extends the bearish dealing range down, right? Now that we've extended the bearish dealing range down, now we're seeing, right, the sell program is still intact. Okay, our sell program is still intact. Now that our sell program is showing that it's still intact, right? If we come over here, put this right here on the lowest low, right? Set that there on the highest high here. Okay, now what do we have right here? Let me hide the fibs for a second because there's a lot going on. Right. Okay, what do we have right there? What is that there? We already said it, but somebody tell me what that is. It's internal liquidity. Yes, it's internal liquidity, right? And where is this internal liquidity resting at?
Right above, it's in premium, right above equilibrium.
Right. So we got buy side liquidity in the premium. Okay. Got buy side liquidity in the premium. And so, and when we look all throughout here, all right, when we look all throughout here,
there is no SIBIs over here, right? We got a whole bunch of we got an immediate rebalance there, got a lot of wicks, right? There's no SIBI there. Okay. So if price is in a sell program now on the intraday time frame, right? It's in a sell program here. We came down here, price came up, right? Did not trade back up into this area. It engineered buy side liquidity, and then it came down and took out the low, extending the low at this point here, right? What would be the expectation for this sell program? You anticipate price to do what? Or should I say you would have to allow for price to do what? Or you want to see price do what? Because we're in a sell program, so we want to see price do what?
We have to allow for
Retrace to a
price.
discount.
Okay.
We're in a sell program, so we don't want to retrace to a discount. We're in a discount right now. Right?
We have to allow for price to either go back into premium or we're still allowing for it to get down to back to that high of the week, which is a ARP. But at this point, you still have to allow for it to retrace back into a premium.
Yes. So you're in a sell program. So you're looking for price to come back to at least equilibrium, preferably in a premium, right? So now you want to identify where you're at in the range, right? So above here is your premium. What's above here? Liquidity there, right? So we don't have in on this time frame here, this 1 minute time frame. We ain't got no imbalances here, right? All we got is liquidity, right? Let's pop up to a 15-minute, right? Okay, the 15-minute is screwing me up. Yeah, the 15-minute is screwing me up because I already started that candle. So let's knock off a couple of those right there. Now let's go to the 15-minute, right? Right. So now, all right, go to the 15-minute, and on the 15-minute, we have current and below. Okay. On the 15-minute, we have that there, like that. Now we're going to get into what I was talking about before. Going back through price, and look, now that we did all that, now we're going to bring it home, right? Now you want to allow for price. You're anticipating price to, let's go ahead and put meat on the bone, right? And then we're gonna talk about it. Boom. All right. Okay. Now, and I went on ahead and put the meat on the bone first so that the people who already saw the live stream, you can see what it looks like when you aren't paying attention to the signatures, as opposed to when you are paying attention to the signatures. All right, I'll put to go to the 5-minute time frame too. So we see here on the 15-minute, you see this 15-minute, we got the fair value gap there, but on the 5-minute, there's a fair value gap too there too. And I think that's the one that I had marked out on my chart. I had the 5-minute marked out, but today I went to a 15-minute. So when I was actually trading, I had the 5 minute marked out, but that's the 15 minute fair value gap there. All right. So when we looking at price, right? When we said we took out the low and we anticipate price to come back up to a premium, right? We got a 15-minute SIBI that's in the premium, right? Remember, we had a 5-minute SIBI, right? The 5-minute SIBI was like up here. Let's mark out the 5-minute, because the 5-minute illustrates it a little bit better, in my opinion. All right. So we got the 5-minute SIBI. Now let's go back down to 1 minute. Right. So we got higher time frame SIBIs above price. Right. We're anticipating price to retrace back to a premium. Right. Anticipate price to trade back to a premium. Now, let's look at something real quick. So 5-minute SIBI. Right. Right. That was 13-point. That was a 13-point move right there. Right now, some people that be over leveraged and they use a static stop, right? That 13 points might have took them out. But if you're using proper stop loss, you ain't got to worry about that. But in the sense of knowing where price will most likely go, right, will give you the opportunity to be laser precise with your entries. All right. So, Tim, what he talked about. When we switch to a sell program, in this case, I'll just say when we have a change in state delivery, right? Once we have a change in the state of delivery, right? Once we have a change in state delivery, you're looking to sell off of the PD arrays that support the bearish change in state of delivery, or you're looking to buy off the PD arrays that support the bullish change in state of delivery, right? So we're in a premium. Okay, we're in a premium, and we get a change in the state delivery. So when we get this change in the state delivery here, now we're looking for reasons, if we retrace back up, to sell off of bearish PD arrays, right? When we look on the 1 minute time frame coming back up through price, right? There's no bearish PD arrays, right, that we haven't gotten to. Is the bearish PD arrays are like all the way up here, and we've already repriced this one and traded back to it already. Traded back to this one already, right? But there's no 1 minute PD arrays here. You have a 5 minute and a 15 minute here in the premium, right? If you're in a sell program, you want to sell in the premium. But there is one other thing. Well, there's plenty of other things, but there's something else that you can focus on, right? To allow you to know where will price, where will the algorithm retrade to, right? You know, how many of you have heard of a market maker sell model, right? If you heard of a market maker sell model, put a 1 in the chat, right? If you've heard of a market maker sell model, put a 1 in the chat. Okay. I see a couple ones. I guess everybody else never heard of a market maker sell model, right? The Zoom got ones in it, but the YouTube, y'all either very delayed or y'all ain't never heard of it, right? How many of you ever heard of a reclaimed order block in the sense of a market maker sell model? All right. I'm burying the lead on this right here. I just love doing stuff like this. Somebody said 1.2, right? So a reclaim order block in a market maker sell model, right? What that is that is a algorithmic point where that's a point where the algorithm left a bearish in the case of a market maker sell model on the buy side of the curve, right? The algorithm leaves bearish order blocks on its way up. And once it gets a smart money reversal and turns around, whenever it gets below these bearish order blocks on the buy side of the curve, the algorithm will reprice back up to them and acquire new short positions or reclaim that bearish order block, right? And it'll go down. And once it get below the next bearish order block, it'll trade back up and reclaim that bearish order block. And once it go down to get below the next order, it will reclaim that bearish order block. Okay. Now, keeping that same concept in mind, right? When you're on the buy side of the curve, right? Whenever, right, you get a area of displacement like this right here, right? You come down there, how we swept out this short-term liquidity, and then we blast off and took out this buy side, right? Whoever heard of a first presentation fair value gap? If you heard of a first presentation fair value gap, put a 1 in the chat. Have you ever heard of a first presentation? If you're in Zoom, you can unmute and say, yeah, I heard of a first presentation. Right?
Yes.
See some ones. 1.3.
Yeah, I heard of a first presentation.
Okay. Now we fun to blow your socks off now. Thinking in the mind of reclaimed order blocks, thinking in the mind of first presentation fair value gaps, right? Now we talked about what the reclaimed order block do. Now the first presentation fair value gap, we all know that this is the first imbalance in line with the narrative that the algorithm creates after a fixed time, a algorithmic time, 9:30, 12 a.m., just an algorithmic time. This is the first imbalance in line with the narrative that the algorithm creates, right? So whenever your price is expanding and you get a displacement like this right here and takes out liquidity, and you're at like a anticipatory reactionary point, right? And then we come back and get a change in the state of delivery. If you look at that first imbalance that was created, right? You look at that first imbalance that was created. I hit the wrong one. You look at that first imbalance that was created. And then I'm going to change the color on this so we can really see it because I got the green background. Right. Make that first imbalance that was created in your expansion leg that took out liquidity. Right. Once you get that change in the state of delivery, that first fair value gap right there, right? That's your high probability inversion fair value gap to participate in this move that the algorithm just gave you with this change in the state of delivery right there. That's your high probability inversion fair value gap right there. And once you get this change in the state delivery, looking down through price, right? All of the opposing fair value gaps, I guess you'll call them, right? You're looking at them, right, to act just like, I'm just going to put these together because they so close, right? You're looking at them to act like those reclaimed order blocks, right? You're looking for them to act like those reclaimed order blocks, right? That one is huge. So Tim, what do you mean? Right? So as you see, right, we come here, we get our change in the state delivery. There's our high probability inversion fair value gap to participate in this bearish Judas swing, right? When we trade down, we came down below this fair value gap right here, right? We came down, took out sell side liquidity, price traded back up into that fair value gap and treated it just like that reclaimed order block, traded back up into that fair value gap, dropped down, right? Came down there, stopped here, traded back up where? Into that fair value gap over there, right? Traded back down here, took out the low, right? Pushed up again here, set relative equal highs. Remember we said price set relative equal highs when we came back up there, set relative equal highs, dropped down, right? Took out the low, traded back up. Did it go to some ambiguous point, right? Yes, we got to our bearish fair value gap in the premium, right? Let's look at the 5-minute chart, right? Looking at the 5-minute chart, right? Let's go back to 1-minute chart. Do this right here. Put it on this level only, current and below. When can I do them all like this right here? All right. Looking at our 5-minute chart here, right? Price traded back up into our 5-minute SIBI, right? And then when this 5-minute candle opened, why did it wick back up here? Oh, you know, wicks just do the damage. Bodies tell the story. Wicks do the damage. We stayed below consequent encroachment. Wicks do the damage. Bodies tell the stories. Nepa. The wick is telling a very intricate story. It wicked up to a very specific spot. That very first fair value gap in that price leg that took out liquidity and then got that change in the state delivery. Came right there, institutional order flow entry drill on that first inversion fair value gap. There's your high probability inversion fair value gap. And once it hit it, all the way back down to the sell side. All right. So when you're looking at price, you always want to know where can price draw to, right? What is it going to draw to, right? But Tim, why did it skip this breaker? Why did it skip this breaker? Why did it skip this? Why did it come all the way back here? Because the algorithm does specific signatures that it's going to refer to at a certain time, right? We're inside a new session, right? Right. So coming here, right? We blast off, take out liquidity, and then we get a change in the state delivery, right? Coming into a new session, right? This is the first fair value gap that was created when the algorithm blasts off on this manipulation run right here, right? So you have this first fair value, for this imbalance resting right here inside this bearish breaker. In this case, is overlapping with a bearish breaker. And it's when we got our change in the state delivery during a specific algorithmic time, right? So now the algorithm knows that 917 inversion fair value gap is where I want to go to before coming back down short. And if you look at how it traded to it, how beautifully precise it did, right? The low of the fair value gap is 23,198 and a quarter. And the high of this 1015 candle is 29,198 and a half. One tick into that inversion fair value gap right there. And then price dropped. Right now, for those who may be listening and say, okay, Tim, it sounds beautifully cherry picked, right? It sounds beautifully cherry picked. Yeah, I was getting ready to work on the course. I don't know what I just did. Oh, I paused it. Yeah, I was getting ready to work on the course a little bit more. Mad blurry. But I decided I can't do that. That's mad blurry. Want to jump on and talk a little bit. That's mad. It's only a couple of us in. That's mad blurry. See if we can do that better.
$1,000 a month. Well, I didn't make this kind of money selling yoga mats and toasters, and I damn sure wasn't talking my friends into buying vitamins and juices. I did it with a free app that's probably already on your phone, and that app is the Kindle app. And the crazy part is,
yeah, I was getting ready to work on the course a little bit more, but I decided I want to jump on and what is that right there? Y'all see that there? That right there, you see that 1 minute fair value gap that's marked out right there? So got a 1 minute bullish fair value gap right there. Now got a 5 minute bullish charts, fair value gap marked right there. Looking at the charts, and got a 1 minute bullish fair value gap. If y'all can spy with your little eye, right? What I got going on the charts right with here, the PD arrays that I marked. If we look, I don't know if you can see it now. Now you can't really see it, but it's like 10:13 a.m. right? And as I scroll this forward, as you see, price traded back up there, right, to that 1 minute fair value gap right there, right? Before it even happened, right? But it was drawn out. It was drawn out in real time. All right. Shut up. Drawn out. Uh-oh. Why did it go down? There you go right there. We talking about that. When I come from here. Oh, this one I cut y'all out. Notice about when y'all, I ain't want people hearing y'all sounding like that right there. And then once I brought it back in. Say again. It went there. Right there. Take off the N and take off the quadrant. Y'all probably can't hear her talking because it's mad low. Take off the N and take off the quadrant. They are the first. They're the first fair value gap in a run that took out liquidity. Right.
Right. But when you notice there, when we started, this was marked out, that was marked out, and that was marked out. That was the only thing on the charts. And it wasn't no price action up there. This was real time. And price traded right back up there and stopped right there at that candle there. And if we, if I move this out the way, right, that's that exact same little area there, right? That's that exact same area there. If I move all this other stuff out the way, right? If I move all that, that's the one that was down there. But if I move all that stuff out of the way, right? Go right there. I don't have an anchor right. There you go. Right. Now it's anchored right, including the imbalance. Right, including the imbalance is anchor right, but just on the actual fair value gap, it was only one tick. But when I anchor it right, including the imbalance, right, that's that same fair value gap right there. The same one that was marked out before any of this price action happened, right? Now you can see that in real time while I was going over it with the gang, talking about those first fair value gaps. As we went and took out liquidity, price came back to that exact spot, took it out, and then delivered, right? And that's just for the haters that be like, oh, it's easy to point that out in hindsight. Nope. If you understand what to look for and understand where price can realistically go, you can make your decisions on how you want to interact with price, right? Because the algorithm made that for a particular reason. What reason did it make it for? To come back and use it as an inversion fair value gap. Tim, how do you know that? Because it was the first fair value gap that was created when we displaced away, taking out this high prior to this change in the state of delivery, right? Well, Tim, what's the change in state of it? It's a million change in states to delivery, right? It's a million of them. Anytime a green candle crosses back over a red candle, that's a change in the state of delivery, right? But you're looking for the change in the state of delivery that the algorithm is going to use for the narrative that is laying out, right? So you want to look for that change in the state of delivery at a certain time compared with other types of change in the state delivery, right? So trading below this opening price of that 919 candle, that gives you a change in the state delivery, right? But combining that change in state of delivery with this inversion fair value gap, which is a type of change in state of delivery, with this bearish break in market structure, which is a type of change in state of delivery, gives you the change in the state of delivery of this entire move. So this combined gives you the true change in the state of delivery for this entire run. Now the algorithm has switched from bullish to bearish. And now that it's switched from bullish to bearish, it knows that this is the first fair value gap that was created when I swept liquidity. It knows that this is the bearish breaker that was created when I had my change in the state of delivery. It knows that this is the bearish fair value gap that's in the premium. It knows that if I come here and trade into this 5-minute fair value gap and I start to pull away, somebody on a lower time frame is going to trail their stop above these equal highs right here. Because let's do this right here, because some people don't believe fat meat greasy. So I'm going to come here and knock that off right there. And then I'm going to take a line and I'm going to connect it to that high and trail it over to this candle right here. When we trade it back above there, then I'm going to go down to a 15-second chart, right? And then when I go to that 15-second chart, now you can see that we have 3 consecutive down close candles right here, right? So now, and we've traded down below, right? This opening price right there, right? And when we trade below that opening price of that, right? That opening price trading below that right there, what does that give us? Matter of fact, this opening price here, because this is a higher up close, the first high, trading below that opening price right there, what does that give us? A change in the state delivery, right? So somebody, right? Somebody who got short, right? And we got to change the state delivery. Somebody done put their stops above these equal highs right here. Why? Because we hit it once, we hit it twice, we hit it 3 times, and we're dropping down. Change the state delivery. And then as soon as we do that, price reverses, takes their head off, and it goes to some ambiguous point. Nope, it goes to that first fair value gap, poking just one tick above the bearish fair value gap. For anybody who was smart enough to say, I'm gonna rest my stop right at the high of this fair value gap right here, one tick above, just to take them out, traded into that fair value gap, and then down goes Frazier. Right. So it's not so much about what's your favorite PD array. It's not so much about should I trade order blocks or should I trade breakers. It's not so much about, you know, should I do I need more than one PD rate? It's about order flow and price delivery. And remember that time is king, right? Understand what the algorithm is showing you when you're going into a new anything, right? Anticipate manipulation. If you see the manipulation, right, that supports your bias, right, you should be chomping at the bit, right? But if you see manipulation that doesn't support your bias, you should be like, let me think about this for a second. Am I wrong? Or is Phil just pushing the buttons, right? Ain't nothing wrong with sitting back looking for more information, right? Ain't nothing wrong with sitting back looking for more information. And then while you gathering your more information, because what do we say when we came into here? We said that price was in a buy program when we came into the 9 o'clock session, right? Tim, you say all this stuff, but what does that look like? I'm glad you asked that question, little Timmy Rogers. Let's go in there and see what it looks like. Chop this stuff off. Yeah, this was my stuff here. All right. Okay. We said that when we came into the 9:30 session, right? Price was still in the buy program. Okay. Price in the buy program. We got our high, we got our low, right? If we're in a buy program, we want to see sell side manipulated first. When we go into this green area right here, we get into the green area, boom, we take off and take out buy side and reject off of it. Right there, we're like, that was against what I thought. We're in a buy program. Let me sit back and see what's going on. Then we get a bearish Judas swing going into 9:30. So going into 9:30, we got a bearish Judas swing when we were in a buy program. We're in a premium, right? So we got a bearish Judas swing. Let's go here. We're not drawing out the bearish Judas swing, but we taking, this is stuff we're taking note of. All right. So we're gonna put a God dog it. We're gonna put a negative and then say Judas.
right? A negative Judas, right? Then we get an inversion fair value gap of the first fair value gap in a displacement leg that took out liquidity, right? So we got an inversion fair value gap. Right? We got a bearish break in market structure. Got a bearish break in market structure. All right. Before that, up here, we got a bearish change in the state of delivery, right? And then all of this together, right? Up here in the premium, all that together, right? Once we come this at this point in time, all of this together has given us the change in the state of delivery from bullish to bearish, right? Because all of that together has said, okay, we've topped for right now, right? We've topped for right now, okay? And then once we've topped, right, and we come down and we establish the sale program, right? We went and we established the sale program. So now, what do? Right. We got a bearish deal. Bearish dealing range. All right. Got us a bearish dealing range. Right. Then we came back, set engineered buy side liquidity. Right. Right. Buy side liquidity. Internal. Right. Engineered buy side liquidity. Then we came back down, extended the dealing range. Extended the bearish dealing range. Okay. So, Tim, what's the point of doing that? This is everything that you're doing in your head and on your screen, right? You're taking notes of everything that happened. And now that you got all of these notes taken, right? You're taking all the different notes, and now you see, right? The sale program is intact. Now that the sale program is intact, right? When you start to retrace back to a premium of the bearish dealing range, what can you short off of? Whatever you choose, right? If you're a turtle soup trader, you short above the highs. Why? Because this high should not be taken. Here's your internal liquidity. As soon as you trade above that high, you short above the high, right? For any PD array, what's your safe stop? Above the swing high. That's inside that price leg that you're trading off that PD array in. That's your safe stop. So everything in here at this time, your safe stop is above this high that shouldn't be taken. Right? For anybody who wondered about stop placement, that's proper stop placement. Now, there's other things that you can do, right? You can put it above mean threshold of order blocks. You can put it above consequent encroachment of fair value gaps. You can put it at the high above fair value. You can lower your risk. You can put it above consequent encroachment of wicks inside of rejection blocks, right? You can manipulate your stop any way you want per the PD arrays, but your safe stop is always going to be the high or the low, right? Turtle soup, right? bearish fair value gap in the premium, right? Bearish breaker, right? Bearish breaker. Okay. That first fair value gap, right? That first one, what we talked about, you anticipate price coming back there, right? That first fair value gap, whatever you want to use, right? Whatever you want to use as far as PD arrays over here, bearish fair value gap, bearish order block there, right? See the sensitivity in the wick, right? Got a bearish order block there, sensitivity in the wick. Whatever PD array you choose to use that supports the narrative of price has came up, giving me a change in the state delivery at a certain time, right? It did it at a certain time. And these are the signatures, right, that it left behind for me to know how do I want to engage. Do I want to engage with the breaker? Do I want to engage with the first fair value gap? Do I want to engage with the bearish order block? Do I want to engage with the turtle soup? Do I want to engage off the old low at the breaking market structure? Do I want to engage whatever you want to engage off of, right? Pick your PD array, but understanding what price is doing allows you to be laser sharp with your entries. Tim, this too intricate. I don't want to do all that. Okay, fine. Go to a 5-minute time frame, and when it retraces back to your 5-minute fair value gap, get short there, put your stop there, and target your low. You don't have to get that intricate. It still works however you want to cut the cloth, right? And then the nice thing about when you come up here and you get that change in the state delivery, right? That's that OT, that's the OG OTE, right? You always get an OG OTE on the retracement back into the range, right? That's the perfect time to get it. Is other ways to look at the OTE. We already talked about that, right? We talked about that before when we get that expansion off of that area of distributional accumulation, right? Get that area of distributional accumulation, then you get that expansion away, come back up into it, right? Expand away, OTE, gone, right? Anyway, man, that's all I got. Hopefully y'all found value in this. Right? Had to make sure I had to go back and play some of the video from yesterday because, it be some haters out there now. I do have haters. Y'all might not think I do, but I do have haters. They be out there.
Good session, Tim. Man, don't worry about them haters, man.
Oh, I don't. I don't worry about them at all, but I just like to poke the bear sometimes. And be like, hey, look at this right here. Oh, yeah. Okay, yeah, but I also said it then too. Silence.
Oh man, all that's real easy to see in hindsight, man. All this, you see everything.
I know. Hindsight 20/20 vision, man. All you need is to open high, low, close, and some money. Hey, that's all I got, man. Anybody got anything for me? Tomorrow is Thursday. No tape reading tomorrow. Tomorrow's Thursday. Don't hate, participate. Yeah, man. Don't hate, participate. All right, man. I don't see nothing in the chat. So we're gonna go ahead and call it there. I appreciate y'all for tapping in. If you found value in this, share this with somebody, man. If you found value in it, share it with somebody. If you found value in that pop-up session we did, I think it was named Price Action Pop-Up 715. Share that with somebody, man. Share that. Who is that? DeAndre and his daughter? What's going on with Amanda here? Yeah. Yeah, share it with somebody, man, because this is important. Understanding how to read this price action is very important. We want to get rid of the speculating and get to the anticipating and projecting. We don't want to speculate. We don't want to chase, right? We want to anticipate. We want to project, and we want to execute when it's time to execute. Time is king. When time meet price, execute, right? Understand the risk that's involved as far as how far price can go, right? Sometimes I have a friend that would like to take your class on August 6th. Do I give them the invitation? The link will be available on August 6th. And just send them the link. Right? The link will be available on August 6th, and just send them the link. It'll be in the description of all my videos. It'll be in the Discord. It'll be, anytime I'm talking, it'll be available. 7-Eleven.
Hold up, one thing.
That ain't 7-Eleven. That's what is breaking news. Trading in Japan's 7 and I halted after. I thought that was 7-Eleven. That's some Japanese thing. 7 and I. One thing, what? Go ahead.
Like you said, it's great across all time frames. With like for today's action, you could have used that 15-minute as well, right? That 15-minute Bissy, that was the last Bissy before we took liquidity at 9:30. Could you as well use that on the 15 as a high probability because we traded back into it before blasting back down?
Yeah, price fractal.
Okay.
Price is fractal. Like everything that happens on the lower time frames happen on the higher time frames.
Yeah, but like for a person, if a person didn't, I'm just making sure if a person didn't want to do, like you said, on the 1 minute, that's perfectly acceptable as well to use that as a high probability
yes
inversion. Okay.
And just like remember when we looked at the 5-minute SIBI, right? When we looked at the 5-minute SIBI, we hold on, let me share my screen again. I will have to I closed that video. Hold on. Let me get back over there because it was what was that, Tuesday? Oh yeah, there it is over there. I still got all the writing on there, so it make it easy to see. All right, so here. All right, so I'm not sharing my screen. I'm sorry, y'all. Wasn't nobody gonna say nothing either. All right, so here. All right. Get all this stuff out of the way. Right. So remember yesterday when I had the stuff marked out, right? I had a 5-minute, right? I had a 1 minute, and I had a 1 minute, right? Remember, I was like, what do y'all see in common with these right here? Right. So this one right here was on a 5-minute time frame. Right. So if you're not into looking at the 1 minute, right, when we go to the 5-minute here, right, we have the first on the 5-minute and then our 5-minute SIBI that's in the premium, right? But if you notice when we came up into this 5-minute, right, yes, we're above the equilibrium just a little bit, but look at how the bodies are very tight to that equilibrium. I mean, consequent encroachment of that first fair value up on the 5-minute, right? And where did it go? It wicks up, right? The wick do the damage, right? The wick is wicking up to the high, right? And like we pointed out before, it went to the high and it went one tick outside of the 5-minute SIBI, right? But if you dig into those lower time frames, you know exactly where it went. It went to one of these just on the 1-minute time frame. But if you don't dig down that deep, that first on the 5-minute right there is just fine, right? It's just fine right there because you come into it, wick outside of it a little bit. Even if you didn't see, even if you weren't focusing on the SIBI, right? Because what you're selling off of the SIBI because you're selling off the bearish fair value gap, but the same thing applies, right? Because price is fractal, right? This is your first, right? This is your first BISI, right? That's created when we took off and took out that high, right? And then we come back down, right? Got to change the state delivery. Got us a bearish breaking market structure there. We also traded below there. We also traded below there, right? But once we did that there's our high probability inversion fair value gap. After we got our breaking market structure, change state delivery, price trades back up into that high probability fair value gap. And this is on the 5-minute time frame, right? So price is fractal is what, you know what I'm saying? It's the same concept, but as long as time is meeting price and it's an algorithmic thing, the concept's going to work no matter what. The only difference is now if you're on a 15-minute time frame, like you were saying today, right? You was on a 15-minute time frame and where's today's price action at? Where we at? Over here. Where we got for the day we're bullish. We got some here to the low right there. Yeah, right here. Right, we got bullish afterwards, but right there, when we coming in here, this is 8:15. This is 9:30. Right, so we today we ain't got it really playing out for coming into the 9:30 time frame here. Right, it's 9:45. This is 8:30. Right. So coming into 9:30, this is our 9:30 time frame there. All right, our 9:30 time frame. So here, yeah, right here. This is a good one here, right?
Yeah, I'm talking about the 8:30 only because it was used to take that pre-market liquidity.
Yeah, right there.
Yeah.
That we got that blast off there, took out the buy side there. So we're coming from here. See, this is our drop down. Then we take off, right? There's your fair value gap there, right? We come up here, we take out buy side, right? We get our change to the state delivery. We get our inversion fair value gap. We trade back up into it. Then we drop, right? Yeah, right there, all the way down, right there, right? So there you go, right there. Prices is fractal, right? So that's our 9:30 time. That's our first fair value gap off of the raid up right there, right? And then price comes back up into that first fair value gap into that SIBI, right? Because we're selling off of the SIBI, right? But the first fair value gap that was created blasting off right there. How far can price come? Came up into that. Then we dropped, right? Now, let's go down and see what it looked like on the lower time frame. Right. So come there. Go down to a 1-minute time frame there. Right. Go to a 1-minute time frame there. If we come here, right, we blast off there. Right. We come, but this is a big right now. We don't reach consequent encroachment. So you'll use the volume imbalance there, right? But that's our first fair value gap, and we blast off there, right? Come down, Get our change of state delivery. Right. And then we trade back up. We got a 1 minute and a 5 minute there. Come back up to the high of the 1 minute. Poke up inside the 5 minute one more time. Then we drop. Right. So same thing today. Price is fractal. We showed it from the, I've said 5 minute, but 15 minute. We showed it just looking at the 15 minute first, then drop down into 1 minute. As we see there, coming into our 9:30 time frame. This is 9:30 there. We wick up, take out that buy side, right? We drop down, breaking market structure, right? This closure here gives us our inversion fair value gap right there, right? Then we immediately use it there and drop down. And then once we trade back up, right, we trade back in, still respecting it, staying inside of it, but we wick outside a little bit, but we're inside the 15 minute now. And then we drop back down, right? So which one you get a credit to? In this case, we're looking at the 15 minute and we're reusing this because we can reuse PD arrays. They can be reused. But when we don't trade to them, that's when I'm looking for the algorithm to reach back to them. Like how it was yesterday when we just had that 1 minute sitting way up there by itself. We hadn't used it yet. So waiting for it to come back. But yeah, exactly. That 15 minute, right? That 15 minute would be the exact one right there. Initially, when I was looking at it, I wasn't paying attention to my time and all that right there, so I wasn't focusing on it. But once I got my bearing, yep, you're absolutely correct. That's it right there. That's how it works. Price is fractal. See, I ain't afraid to tell people when I mess up. Hey, I messed up. I wasn't looking at it. That's why I put my line in. I went and put my lines in. Once I get my lines in there, look at price, boom, there you go. Yes, you're right. Right.
On that one, when you went back to that 1 minute in that area, will you look at that 9:17 candle?
You said look at
Today's like that 9:17.
You said 9:17.
Mm-hmm. Okay, stretch it a little bit and just make sure it's not being used incorrectly. So in that area, that 9:18, you use that gap. There's a small
Right here.
fair value gap in that area. And so it was in, I guess, maybe I'm looking at it wrong. Like I said, we're in consolidation, but when we come down to it at 9:27, and then that's our last down, and we push to take liquidity. At that, would you use that gap then, or would it be incorrect to say that that gap is high probability because it was used as that final gap to push price up, and then when we close below it, it could be considered because you have a change in state of delivery right there, that area, and then you close below it. Could that be considered high probability as well?
For me, y'all already know how I feel. Whenever we're inside of like stuff like this right here, I opt to just looking at the whole thing as something. Like I'm looking at it as a balanced price range. I'm not looking for individual PD arrays in here because we're just accumulating, we're just consolidating here. And I'm looking for when the elephant step in the pool like this here and this here. So I'm just looking at this as like time distortion, if you will, because it's just back and forth, back and forth, back and forth. It's very efficiently delivered. So I'm not looking for imbalances or breakers or anything inside there. If anything, right, I would just look at this right here as the breaker overall, because I'm looking at it as we came here, came here, came here, and came there, right? I'm just ignoring all of this right here, and I'm just looking at the actual move because I don't look for PD arrays inside here. Technically, you can look for PD arrays in here because on a lower time frame, it's happening. You know what I'm saying? Like on a lower time frame, this is something very significant on a lower time frame chart, right? Matter of fact, let's just go look at that. If we just come here, chop that off right there, and then we're gonna go down to like a 5-second chart, right? Come down to a 5-second chart, and looking at a 5-second chart here, right? It's like significant stuff going on this 5-second chart, right? See what I'm saying? It's like significant. Let's go back to where we was at. This was right here. This is the area we was looking at right there, right? So if we come here and highlight this, that went above consequent encroachment. So we'll look at those as two separate things, right? That wick is above consequent encroachment. So you'll look at the, get out of here, right? You'll look at the fair value gap, and then you look at the volume imbalance as two separate things, right? Because that wick extends past consequent encroachment when we do that, right? And then when we go back to and look at how that 1 minute candle stopped right there on that right there. Let's go back to that 5-second chart, right? So, right, going back to that 5-second chart now, right? When we're inside there, price is doing like, if I didn't say, oh, this is a 5-second chart, it looks just like any other chart. You see what I'm saying? This looks just like any other chart. We got, right? We took out a high there, dropped down, took out a low, right? We came up, right? Took out that high. Now we got a bullish dealing range there. We got internal liquidity here, right? We dropped down, engineered sell side liquidity there, right? Expanded the dealing range again, dropped down, dropped into, right? Taking out the sell side, right? And then, right, came down. Did we take out that low? Engineered sell side liquidity there. We didn't take out the low, right? Engineered sell side liquidity there, right? Push back up there, coming into 930, right? When we come into 930, right? We're in a buy program, right? We drop down, right? Drop down, hit there, right? Come up, drop down, take out the sell side, right? Take off, boom, take out the high, right? What do we do first? Drop down, manipulate out the low first, then go take out the high, right? Where was the high? The high was, you know what I'm saying, over, well, we took out multiple highs there, but going into 930, right? We dropped down, and when this candle opened up there, right? Took out that low first. We dropped first, right? Dropped again, right? We made a low after 930, right? Dropped, took out that low, and took out the low prior to 930. Then we took off and took out the high. So down here on a 5-second chart, right? We're still, right, reacting. And then where do we come down to, right? When we, well, even here, right? We respect consequent encroachment of that volume imbalance, right? Came back up, dropped down, dropped below the volume imbalance, but stayed inside it. Wick down, took out the sell side, still respecting it. This that 1 minute volume imbalance. Remember, 1 minute volume imbalance, right? Then once we went up and took out the buy side, now all of this, what we talked about, creating this bullish dealing range, right? When we had that right there, we took out that high, made that bullish dealing range, right? Came down, support off the fair value gap, right? Came down, took out the sell side, respect the volume imbalance, right? Came down, swept the sell side after 930, manipulation down, you in a buy program, take off to the highs, right? But all of that's on a 5-second time frame. And so the price is fractal. The concept's gonna play out on every time frame, but you just got to play within the bounds of, I understand, okay, I'm on a 5-second chart, so I can't be trying to hold this forever. I'm on a 15-minute chart, so I need to probably hold it a little bit longer. I'm on a 4-hour chart. I might need to hold this for a couple of days. You see what I'm saying? Price is fractal. So when you just understand what time frame you're looking at, and don't avoid, I ain't gonna say don't, but for sanity and higher probability trades, don't look for PD arrays and stuff like this, right? Remember what I always say: when the elephant step in the pool, the water gonna move, right? See here, we just consolidating here, and then price takes off there, right? We're doing a whole bunch of back and forth, back and forth, back and forth. When price start dropping, right? What does price retrace back to? It comes in here where price was moving, right? It ain't come back up in this right here. It came right back up. Now, and don't worry about what it's coming back to, but just look, it's coming back to where price was moving, right? Because when we looking for PD arrays in this, we're just making it hard for ourselves, unless you're trying to drop down to sub 1 minute time frames and be looking for, you know what I'm saying, something to trade off of, right? I think that's it, man. I think that's all I got. Unless you got something else, got anything else, you know?
No, that was good. I was just that clears it up. You said it again, and okay. Just time distortion, get out of it and look for.
Yeah. And I know and I get like that too. So this is what I do, right? When I'm looking to trade, right? When I on a day that I want to trade, right? I sit down at the charts a little bit before 9, right? Unless I'm trying to trade pre-market. If I'm trying to trade pre-market, then I may sit down at the chart about 7:45, right? And the reason why I sit down there at 7:45, because I want to give like that first 30 minutes from 7 to 7:30. That's like the pre-market range, and then like 7:30 to 8, that's more like the opening range. You know what I'm saying? This is how Michael kind of teach it. And then from like 8 to 8:30, that's like the pre-market range. And from 8:30 to 9, that's like the opening range. And from 9 to 9:30, that's like the pre-market range. And from 9:30 to 10, that's like the opening range, right? So, and you're looking for those relative equal highs or relative equal lows presented from 7 up until 9:30, right? And if it's not presenting relative equal highs or relative equal lows, it's not there. You can't trade it. But there's other things you can look for. Do you see displacement that took out a key level of liquidity that ended up giving you a change in state delivery? Now you can focus on those first fair value gaps that took off on that displacement on the opposite side of the curve, right? Price could realistically retrace back to that. So if it's retracing back to bullish fair value gaps in a discount, right, you're looking for those inversion fair value gaps that's in a discount, that's on that displacement leg on from the bearish side, right? You're looking for that inversion fair value gap. You're looking for that inversion fair value gap that's in the premium on the opposite side of the curve when you're looking to short, right? That's in line with a bearish fair value gap. But if ain't no bearish fair value gap there, is there a breaker there? Is there a bearish order block there that's in line with that inversion fair value gap? Right? These are all different things you can look for like types of confluence to let you know, do I want to participate, right? But once you get outside of that window, right, you get into like 10:30, 11 o'clock, and price is getting real muddy, right? A lot of times, if price has been fluid early in the New York session, right, I'll come back in the afternoon and see if it want to do something, because it's not just going to be fluid unless it's a trend day, right? If it's not a trend day, now I've gotten outside of my window. And personally, my window is right. I'm trying to get away from the chart at 11, right? Because 11 to 11:30, that's your London close, right? And a lot of times, if the New York morning has had a nice move, the London close might be trash, right? Or the London close may present a retracement on stops that's been winning, right? So a retracement on stops that's been winning, that might be going against the bias of what you're trying to do, right? So you can get tripped up. So that's why at 11, if I ain't got nothing presented to me by then, I'm getting away from the charts, and then I'm coming back at about 1:50, 2 o'clock, right? Why? Because that opening range in the afternoon is from 1:30 to 2. Now I see, okay, my opening range is established, and now I can see how is price interacting with this afternoon opening range. Is it offering me anything, right? Because now I'm eliminating the possibility of just sitting there staring at mud between 10:30 and 12, right? I'm eliminating the staring at the mud between 12 and 1:30, right? Sometimes 12 and 1:30 be beautiful, right? But on them, if it's beautiful on them days, I don't see it because the 12 to 1:30 ain't always beautiful, right? But if I'm looking at the morning from, you know what I'm saying, 8:45 till 11, or the afternoon, and then or the afternoon from 1:45 to, you know what I'm saying, 3:30 or so, right? 3:45, then I'm going to get something of value throughout a few times a week, right? And in some weeks, I may get some every day, right? Depending on how much of a chunk I'm trying to bite off, right? But if you avoid those lulls, then you avoid that chart fatigue, and you avoid trying to look for everything everywhere. Because when you sit up there watching candles print, right, every move look like a big move, right? So another thing you can do outside of the time window, 8:45 till 11, if you want to trade the New York morning, 1:45 to like 3:30, 3:45, if you want to trade the New York afternoon, outside of staying away from the chart, outside of them windows, right? Then you can I lost my train of thought. I said the windows this year. Golly, or something. I was about to say something. I lost my train of thought. Afternoon, time windows, several times a week. Man, it's gonna drive me crazy, because I was about to say, it was like outside of the time windows, staying away from the chart during the time windows. Man, what was I about to say? It was something good too. Oh my goodness. It's gonna drive me crazy. Anyway, those little, just use that to stay away. Oh, the windows, right? Because when you're sitting there watching price print, right, every move look like a big move. So what you can do, that's why when y'all know, when we be watching price, it be kind of small sometimes, so I know it'd be hard for y'all, but I always keep the 1 minute, 15-minute, and 5-minute up at all times, right? So when, just like looking at this 1 minute, right? You see how granular that look, how grand that look, or whatever the word I'm looking for, look like a huge move, right? So I always glance over to see what are we actually doing on the higher time frames, because for intraday, 15 minutes is really all the as high as you need to go to find good setups for intraday price action, right? So what is my 15-minute telling me, right? Are we still just consolidating, or are we breaking out of a range, right? Have we swept liquidity on the 15-minute time frame, or are we just taking internal liquidity on the lower time frame,
right? Should I anticipate price to continue from this, or should I anticipate price to reject from this? How do I know that? What is my 15-minute and my 5-minute telling me, right? Because looking at my 15-minute, right, I'd be like, okay, I'm still in the sale program, right? But then looking at my 1 minute, I'm like, okay, I might be breaking out. So now I need to know, am I coming back to a 15-minute fair value gap right here, right? So this expansion is going to be short-lived when it gets back to this 15-minute fair value gap right there, right? Or do I not have anything for the 15-minute to come up here, and then I'm trading above this 15-minute high, right? On the lower time, when the lower time frame get there. Now that I trade above this 15-minute, I traded above a 15-minute high, and ain't nothing up there but liquidity. So now I can trust this displacement, right? You always want to glance over at what is the higher time frame doing, right? And when you're looking at it, right, and not only glance over to see what the higher time frame doing, whenever you like you watching the clock and you see this little countdown, right? It say we got, that's why y'all always hear me say we got 24 seconds left on this 5-minute candle. We got 15 seconds left on this 15-minute candle, right? That's letting you know that I'm watching these 1-minute candles, but in 13 seconds, right? Because we lined up with everything, in 9 seconds, I'm going to complete a 15-minute candle, right? So when this 1-minute candle run out, right? Boom, it ran out. Now I want to see what did the 15-minute and the 5-minute do, right? So now I see the 5-minute gave me an inversion fair value gap after we swept sell side, right? The 15-minute, right? I don't have a fair value gap yet, right? But I'm trading up into a bearish fair value gap on the 15-minute, right? And on the 1-minute, right? I got some displacement going on. So now I know, okay, 5-minute, I have an inversion fair value gap, right? 5-minute, I got an inversion fair value gap after taking some short-term sell side, right? That's just short-term sell side. I didn't take out higher time frame sell side. I took out short-term sell side, got an inversion fair value gap, right? Got that noted. I'm paying attention, right? My higher time frame is still inside of a range, right? My 1-minute time frame, right? I got a breakaway gap, another breakaway gap, right? So now I'm looking to see if price supports here at this balanced price range on this one. I want to see support there based off of this bullish move on the 1-minute, but I'm watching the 5-minute and I'm watching the 15, right? So this is how I keep myself from getting caught up into looking for everything in here, because this is where it starts to take shape, right? But this right here is giving me my narrative, right? So until we start doing things on the 15-minute, like taking 15-minute liquidity, right? I'm taking this stuff with a grain of salt, right? And then as we develop more and more, right? So now let's say in the next 3 minutes, right? We create a bullish fair value gap here. Now I got a bullish fair value gap. I got an inversion fair value gap, right? And then in the sense of this right here, yes, we're inside this consolidation, right? But this right here technically would be a breaker, right? But I'm not looking for all of that inside here, right? Until this starts to flesh out, right? And then the lower time frame already got all of that stuff in there, but until the higher time frame starts to show me that, right, when you start seeing an inkling of it on your higher time frame, it's been developing on your lower time frame. But the thing of it is, you don't want to just jump in trusting the lower time frame when you're in the middle of the range on the higher time frame, right? Because right now we got a low here. Let me get all this other stuff off here. Get out of here, brushes. Okay, so, right, we got a low here and we got a high here, right? And we're inside this range. So I'm only taking this with a grain of salt. Why? Because we're inside of this range and we haven't taken out liquidity there.
right? We still haven't traded up into this SIBI right here, right? Thing we did, we're in a bullish dealing range, right? And then we came down, right, into the last down close count of this order block, right? So it's looking kind of heavy, but we not taking out the sell side, right? And now we're just kind of consolidating on this higher time frame. So I'm taking all of this with a grain of salt because the higher time frame isn't giving me anything to really sink my teeth into. But looking at all of this right here, like, oh man, we blasting off, we fun to go, right? We could very well be, but what's a time when you can trust this right here? If we've come up and taken out this high and we're up here at this anticipatory reactionary point, and then we get a move like this, right? We get a move like this after taking out this buy side, hitting that, and then dropping down. Just say if this move here happened right there, now I could put more weight on this because it's happening at an anticipatory reactionary point, and I could put more weight on it with far less risk because it's far less risk on this lower time frame than on this higher time frame. And now I'm getting the signatures at an anticipatory reactionary point after in the right time, right? And it's not in the middle of the range where I'm just guessing, right? So I don't know. Hopefully it makes sense. Hopefully all of that made sense what I was just saying. We've been on here forever. So welcome David Hartgrove to the mentorship. Welcome Dave to the mentorship. The YouTube mentorship. Welcome, welcome, welcome. I think that's it. I'm getting kind of hungry, so that's gonna be it. I'm getting kind of hungry, so that's gonna be it. Hey man, until the next time. And you know what? I wasn't even gonna do no price action recap today. I was laying on the bed watching the episode of You, and I was like, man, I don't feel like getting up. I ain't gonna do no price action recap. Then I was like, man, I ain't doing nothing. Let me go ahead and get on. And then I feel like we had a good session, so I'm glad I did it. Hey man, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we like to call price action. It's your boy, Timothy Lee Rod Sr., aka Aranya Glende. That's just Big Spot if you know how blue it's been. Yo, man, y'all be safe out in these trade streets. I'm gone. Yeah.